The time by Caracas is 6 p.m. and this is CBX Business News. The business news headlines are brought to you by QMax Wealth Management, making more possible. Earnings under pressure, reputations restored, and a global energy warning. Good evening and welcome to CBX Business News for Thursday, February 19, 2026. I'm Rachel Moncrief. Thanks for joining us. Coming up, Cigna's Q2 loss overshadows Puerto Rico gains as timing gaps and restructuring pressure dividends. Also ahead, EU removes Trinidad and Tobago from tax blacklist, restoring financial credibility and improving investment prospects. And later, UN chief sounds alarm on fossil fuel threat to global stability, warns energy dependence undermines long-term prosperity. Stay with us as we unpack these stories and more right after the break. The local news is brought to you by Derrimon Trading, better from the start. The Development Bank of Jamaica, facilitating economic growth and development. Caribbean Flavors and Fragrances, tease the senses, and Pulse Investments. Welcome back to CBX Business News. We begin with a quarterly loss at Cigna's, even as its Puerto Rico business hits record highs. Cigna's Credit Investments, SCI, has reported a loss for the December quarter, even as its Puerto Rico subsidiary delivered record results. For the 3 months ending December 2025, the private credit firm posted a $527,000 loss as total investment income declined 23%. Management says the result reflects a temporary $1 million interest income timing gap and accounting adjustments linked to its Puerto Rico arm Accrescent Financial. Despite the overall loss, Accrescent recorded more than a 62% growth in investment income and a record $1.82 million in net profit, while paying its first dividend of $1.12 million to Cigna's.
So that translated into a 22.6% growth in net profit for the quarter to $1.82 million for Accrescent, and that's a new record as well. So the total investment income is a new record, and the net profit for the quarter is a new record. And in terms of SCI's investment in Accrescent, how we look at the return since the reorganization that would have taken place on July 1, 2023, that's giving SCI a positive 21.5% return on invested capital, which is a phenomenal rate of growth for a credit business. So that business is doing very well.
For the 6 months ending December, Cigna's reported a net profit of $2.65 million, down 48% from $5.13 million a year earlier, while earnings per share fell to 0.46 US cents. The company also reduced its dividend payout, citing borrower restructuring and the impact of Hurricane Melissa on portions of its Jamaican private credit portfolio.
That based on the reduced earnings, that would have reported in the financial year, that 1 million would have been the appropriate dividend versus 1.6. So it would have been above the 5% if we had paid another 1.6 million dividend. So it's just out of an abundance of caution to say, well, we are managers of risk, and if we have, additional expected credit loss so substantive, then we can't, well, we shouldn't, in my view, pay a $1.6 million dividend, which would be consistent.
That was Chief Executive Officer of Cygnus Credit Investments, Jason Morris. Dollar Financial Services says a fraud incident impacted roughly 4% of its loan portfolio in 2025, triggering full write-offs and a sweeping overhaul of its internal controls. The issue involved falsified property titles, improperly registered security documents, and fraudulent motor vehicle liens, part of what executives describe as a broader network unsettling Jamaica's financial sector. Group CEO Kenroy Carr says while the exposure was material to expenses, it represented a small portion of the overall book and was fully accounted for during the financial year.
The fraud definitely had I would say, a material impact on our, it represented a small portion of the portfolio, roughly about 4% of the overall loan portfolio. But it did have a big impact on our expenses and obviously the bottom line at the end of the year. Our expenses outside of the the fraud event that we accounted for and the write-offs that would have been associated with those activities. So our expenses in general actually remained flat year over year. And as a company, despite the fraud, we were still able to grow profit before tax at a rate of about 22%. So you can just imagine what the growth would have been had it not been for those write-offs.
That was Dollar Financial Services CEO Kenroy Carr. NCB Financial Group, NCBFG, is describing its $225 million bond issue as a strategic breakthrough, even as some shareholders questioned its cost. The company confirmed that its multi-million-dollar senior secured note issued under Rule 144A in the international capital markets represents a major milestone in diversifying its funding base. Lead Independent Director and Audit Committee Chair Gary Brown described the transaction as transformational.
You spoke to the 144A offering. I mean, that is a tremendously successful offering. A lot of people will complain about, oh, the price was too high, you paid too much. But we opened up a brand new financing market, an international financing market for this bank that's based here in Jamaica. That was a tremendous achievement. Over the course of time, as our financial results improve, we will be able to retap that market, hopefully at much better rates than we had at the time that we went to the market. But for us, opening the market was the major achievement. Having the ability to go seek financing internationally for a bank of our size as a mid-cap bank effectively is a very, very significant achievement.
That was NCBFG's Lead Independent Director and Audit Committee Chair Gary Brown. 138 Student Living Jamaica Limited is reporting higher profits for its first quarter, despite a slight dip in revenue. For the 3 months ending December 31, 2025, the student accommodation provider recorded revenue of $405.6 million Jamaican dollars, down 1% from $411.7 million in the corresponding period in 2024. The company says the decline was primarily due to reduced income recognition under its restoration concession agreement. Despite the softer revenue, profitability improved. Net profit for the quarter rose 12% to $92.7 million Jamaican dollars compared with $82.4 million a year earlier. Earnings per stock unit increased to 17 cents, up from 15 cents in the prior year. Profit from operations totaled $171 million, while finance costs declined to $68.8 million, supporting the stronger bottom line. As at December 31, total assets stood at $9.06 billion, with shareholders' equity at $4.88 billion. Management says average occupancy increased to 98% during the quarter, reflecting sustained demand for student housing at UA Mona. The company adds that negotiations with the university regarding the Irving Hall concession agreement are at an advanced stage and remain a key focus going forward. We move to the latest updates from the JSE equities. In Thursday's trading session, the JSE market activity resulted in the trading of 110 stocks, of which 40 advanced, 47 declined, and 23 traded firm. Leading the winners are Productive Business Solution USD Ordinary Shares, Margaritaville Turks USD, Sterling Investments USD, and JFP Limited. While leading the losers are Caribbean Cream, Medical Disposables and Supplies, Epley Caribbean Property Fund SCC, and Margaritaville Turks. The main index declined by 1,020.79 points to close at 342,544.95 points. The junior market index advanced by 5.74 points to close at 3,319.21 points. It's time for the Market Education feature, brought to you by CARICRIS, Regional Ratings, Global Standards. In today's Market Education feature, we will be defining earnings per share. Earnings per share, EPS, is a widely used indicator of a company's profitability. It shows the portion of a company's net income allocated to each outstanding share of common stock. In general, a higher EPS suggests that the company is more profitable. EPS is calculated by dividing the company's net income by its total number of outstanding shares. To determine a company's EPS, information from both the balance sheet and the income statement is used to identify the period end number of common shares, any preferred dividends paid, and the company's net income. For greater accuracy, analysts typically use the weighted average number of common shares outstanding during the reporting period, since the total share count can change over time. Knowing how to calculate EPS is essential for assessing a company's profitability. That was the Market Education feature, brought to you by CARICRIS, Regional Ratings, Global Standards. And that's it for the local news segment. Please stay with us. The regional news is up next. The local news is brought to you by Derrimon Trading, better from the start. The Development Bank of Jamaica, facilitating economic growth and development. Caribbean Flavors and Fragrances, Tease the Senses, and Pulse Investments.
Caribbean Dreams, instant turmeric tea. What you put in is what you get out. What you put in is what you get out, yeah. Build up your body, boost up your brain. Take on the world now. Say bye-bye pain. Caribbean Dreams, instant turmeric tea. Be good to you. Caribbean Dreams, instant turmeric tea. Distributed by Amalgamated Distributors Limited.
Welcome back. And now for the regional business news. Trinidad and Tobago has officially been removed from the European Union's EU list of non-cooperative jurisdictions for tax purposes, ending years of heightened international scrutiny and marking a significant shift in the country's financial standing. The delisting follows sustained tax and regulatory reforms aimed at strengthening transparency, tightening compliance standards, and aligning the country with internationally accepted governance frameworks. Prime Minister Kamla Persad-Bissesa says the decision restores credibility to Trinidad and Tobago's financial system and sends a clear signal to global investors that the country now meets required international standards. The blacklist designation had carried reputational consequences, exposing financial institutions to additional due diligence requirements and complicating certain cross-border transactions. Government officials say removal from the list improves the country's competitiveness, strengthens its position in global markets, and enhances prospects for foreign direct investment. The European Union reviews the list twice yearly, meaning continued compliance will be critical to maintaining the improved status. St. Kitts and Nevis has completed its first large-scale government-owned desalination plant, a major infrastructure investment aimed at ending chronic water shortages and strengthening long-term economic resilience. The $60 million Eastern Caribbean dollar facility is already producing approximately 2 million gallons of potable water per day, significantly boosting national supply capacity. Speaking at a round-table interview on Tuesday, Prime Minister Dr. Terence Drew says the project marks a turning point in water security for the Federation.
The desalination plant is being constructed. It is now complete. It is producing presently 2 million gallons of potable water daily. During the commissioning period, we know that there were areas receiving water already. Frigate Bay, Bird Rock, and so forth. In addition to that, we have done some other work to divert water to other areas that were water scarce. This is a $60 million investment.
The plant is expected to reduce water rationing and improve reliability for households, tourism properties, construction projects, and small businesses that depend on consistent supply. The Prime Minister says the Federation is moving decisively towards round-the-clock water access.
And we don't intend to ever go back to a place where people can't have 24/7 water. So the journey has really started.
Prime Minister of St. Kitts and Nevis, Dr. Terence Drew. The Caribbean Development Bank, CDB, has retained its AA+ long-term issuer default rating from Fitch Ratings, with a stable outlook underscoring the bank's financial strength and resilience. In its February 5, 2026 rating action, Fitch says the affirmation reflects CDB's strong standalone credit profile, supported by top-tier liquidity and solid capital adequacy metrics. The agency highlighted the bank's excellent capitalization, noting that its usable capital to risk-weighted assets ratio stood at 78% at the end of September 2025, more than double the threshold required for the highest assessment. Fitch also cited low credit risk, an excellent preferred creditor status, and very high liquidity buffers as key strengths. The bank's treasury portfolio was rated AAA for credit quality. The rating agency further pointed to CDB's $450 million exposure exchange agreement with the Central American Bank for Economic Integration, executed in May 2025, which reduced borrower concentration risk and strengthened its risk profile. Fitch said the bank's Special Development Fund remains separated from its core balance sheet, limiting potential risk while preserving concessional lending to its poorest member states. CDB President Daniel Best describes the affirmation as validation of the bank's strategic reforms, saying the AA+ rating ensures continued access to low-cost capital to support sustainable development across the Caribbean. It's now time for news from the Trinidad and Tobago Stock Exchange. Overall market activity resulted from trading in 21 securities, of which 4 advanced, 7 declined, and 10 traded firm. Today's winners are Trinidad Cement, Guardian Media, the West Indian Tobacco Company, and NCB Financial Group, while leading the losers are Ansa McCall, Trinidad and Tobago NGL, First Citizens Group Financial Holdings, and Republic Financial Holdings. Trading activity resulted in the following movements. The All TNT Index declined by 24.27 points to close at 1,366.32. The Composite Index declined by 11.56 points to close at 946.86. The Cross-Listed Index advanced by 0.31 points to close at 69.68. The SME Index remained at 92.68. And we take a short break, but please do stay with us. The international news segment is up next.
Caribbean Flavors and Fragrances Limited has been a part of Jamaica's manufacturing landscape for over 20 years. By crafting unique flavors and fragrances, we have become a part of your favorite household and food items, such as beverages, ice cream, household cleaners, and much more. Known throughout the Caribbean for the highest quality, we continue to innovate with strong leadership, a dedicated team with integrity. We go the extra mile for our customers. Create the next taste sensation. Contact us at 876-9235-111 or visit our website, Facebook, Instagram, or LinkedIn pages.
Welcome back. In international news, at a ministerial meeting of the International Energy Agency (IEA) held yesterday, February 18, UN Secretary General Antonio Guterres delivered one of his sharpest rebukes yet to critics of the clean energy transition. In a speech that signaled growing frustration, Guterres accused some fossil fuel interests of deliberately slowing global progress, spreading disinformation, and pretending transitioning to clean energy is unrealistic or unaffordable. Additionally, he says the world's addiction to fossil fuels is a threat to global stability.
Let's tell it like it is. The world's addiction to fossil fuels is one of the greatest threats to global stability and prosperity.
Following that sharp warning, Guterres highlighted the human and economic costs of fossil fuel dependence. He noted that 3/4 of the world's population live in countries that rely on imported energy, leaving them vulnerable to volatile prices, supply disruptions, and geopolitical turmoil.
3/4 of humanity lives in countries that are net importers of fossil fuels. Dependent on energy they do not control at prices they cannot predict. Watching development budgets siphoned into fuel bills. At the constant mercy of geopolitical turmoil and supply disruptions, and this insecurity is baked into the system.
Guterres then called for a dedicated global platform to coordinate the shift away from fossil fuels, bringing together producers, consumers, governments, financial institutions, and civil society. The goal? To align investment, energy security, and climate goals while ensuring the transition is fair, orderly, and affordable, particularly for developing countries.
That is why today I am calling for a dedicated global platform for honest dialogue on transitioning away from fossil fuels. This platform must bring together producers and consumers, developed and developing countries, public and private financial institutions, and civil society. It must be a space to sequence the decline of fossil fuel investment with the rapid scale-up of clean energy, and to deliver a global transition plan that aligns investment, energy security, and climate goals with concrete milestones and robust finance, particularly for developing countries.
That was UN Secretary General Antonio Guterres. Swiss food giant Nestlé is moving to exit its remaining global ice cream operations as part of a sweeping corporate restructuring under new leadership. The decision marks a significant shift away from a legacy category as the world's largest food company sharpens its focus on faster-growing, higher-margin segments. Nestlé has entered advanced negotiations to sell its ice cream businesses in Canada, Chile, Peru, Malaysia, and Thailand to Froneri, the joint venture it established with private equity firm PAI Partners. If completed, the transaction would bring Nestlé's remaining in-house ice cream operations fully under the Froneri structure, further simplifying its global portfolio. The divestment forms part of CEO Philippe Naratil's broader strategy to streamline operations and reduce complexity. Nestlé says it will concentrate resources on 4 core divisions: coffee, pet care, nutrition, and food, areas it views as offering stronger long-term growth and profitability. In its latest results, Nestlé reported modest organic sales growth but flagged margin pressure linked in part to recall-related costs. Analysts say divestitures such as the ice cream sale could improve operational efficiency, strengthen margins, and enhance capital allocation going forward. Oil prices dipped in early Asian trading Thursday after a strong rally the previous session as investors reassessed the geopolitical risks tied to ongoing tensions between the United States and Iran. Brent crude fell about 0.2% to around $70.23 per barrel, while U.S. West Texas Intermediate edged down 0.1% to about $65.11. The modest declines followed a more than 4% jump in oil prices the day before, driven by fears of supply disruption amid heightened U.S.-Iran military posturing. Analysts say markets are showing signs of caution, balancing conflict concerns with the view that a full-scale confrontation remains unlikely. Recent military movements, including rocket launch notices issued by Iran and the deployment of U.S. warships in the region, have kept traders on alert. Diplomatic efforts continue, with negotiations showing limited progress as major unresolved issues persist. In addition to geopolitical uncertainty, energy traders are watching U.S. inventory data for refined fuels and crude stocks after industry figures unexpectedly showed a drop last week. Officials are awaiting government figures from the Energy Information Administration for clearer signals on supply dynamics. The oil market's recent volatility highlights how geopolitics and supply expectations continue to play a central role in commodity pricing, with investors weighing potential risk premiums against broader economic indicators and demand outlooks. And that's it for the international segment of the newscast. The news recap is coming up on the other side of the break.
Mikey, is what sweet you saw?
Yeah, dear babes. Where's the Cathy? We are going to party tonight.
Party? You secure your future yet? Careless.
Did you know that over time the stock market has provided a reliably high return on investments? Be sure to contact a licensed stockbroker for more information on this exciting investment opportunity.
Taking care of business, Mikey?
Yeah, Cathy. I'm securing my future. Want to come look over my stock portfolio?
The Jamaica Stock Exchange, providing a fair, efficient, and transparent stock market.
And now to recap our top stories. In the local news, Cygnus Q2 loss overshadows Puerto Rico gains. Regionally, EU removes TNT from tax blacklist, boosting investor confidence. And internationally, UN chief sounds alarm on fossil fuel threat to prosperity. Those were the stories making today's CBX Evening News. On behalf of the entire production team, I'm Rachelle Moncrief. Thanks for watching CBX, your region, your business, your source.